Hey, Mike here. I just wanted to share with you for a moment an explanation of the CD or closing document that you will sign here momentarily, usually through our DocuSign system. The closing document was designed a few years ago when the CFPB, our governing body, had put in legislation to try to make it a little easier for clients to realize what's happening here at the end, the kind of eyes wide open as you go into the finish line. Unfortunately, the roots are in fraud and misuse and overcharging at the end and things like that. So the document is designed to give you a very clear picture on anything that has changed since the outset of the application and excuse me, and at the closing. So I'm just going to take a moment and walk you through it. This is kind of what it looks like. Again, it'll be coming through our DocuSign system in most cases. A couple of things to point out. That first box is, of course, going to summarize your final loan amount, interest rate that you locked in, and what the principal and interest payment is going to be. On the bottom, you see those two boxes. It shows you what your escrow account and whether it's going to be impounded or not. Property taxes and homeowners insurance are the most common. You may also have homeowners dues. If that's the case, usually that's paid outside of closing, but would be listed here as well. And of course, that bottom box, your final closing costs and what cash to close you have remaining after all credits have been given. Page 2, a summary in brief on all of the charges that were made to this particular loan. Everything from points, cost of the appraisal, credit report, title report, escrow, other fees. The bottom half is focused on prepaid items like property taxes, homeowners insurance, and prepaid interest. All of that's on page 2 for you to review. Page 3, take a look at the top. The top is kind of cool because it shows what went out on your loan estimate when you locked in your interest rate with us and what has changed since the final. Any additional credits. Could be a cost of an appraisal that was proof that it was paid, or earnest money clearing your account, or something else like that. Or maybe there's a seller paid credit or an agent has credited to the transaction. It shows in one spot what changes were made. The next page, just a couple of arrows to point out. Is this loan assumable? Very few loans are. VA loans are in certain situations. This particular example is a VA loan. Okay. The other one, does it have a negative amortization feature, on there, which those are illegal now. So you will have a box that clearly states that there's no negative amortization. And that upper escrow account, do you have an escrow account? Yes or no? That box is most of the time checked. And then right below it is, again, summary of what property taxes, homeowners insurance, etc. would look like. Last section, the bottom half shows all the people that are involved in this transaction: real estate agents, lender, title company, escrow company, and so forth, and their contact information, so that should you have any questions, you should be able to call each and every one of us that played a role in this transaction. And this is it. It's really your signing page. Why did I take the moment to explain that? Well, it's because it's complicated. And it seems like people get confused at the very end. And it's really, really important because legally every loan has to have a final closing document, CD, that you sign. And then you have to wait 3 days. 3 days are counted as business days, including Saturday, but do not count holidays. That's the easy way to explain it. After that 3-day period, then you can sign final loan documents, okay? This doesn't matter if it's a refinance or if it's a purchase. So I wanted to just take a few minutes and share with you exactly what that is so that you know, again, eyes wide open as you finish this transaction with us. I look forward to having you as a customer for life. Please call or email me if you have any questions. Thank you.